Hi, fellow traders. How's it going? I've got another segment here to share with you on how to really grow a small trading account. I hope you enjoy it and get a lot out of it. I enjoyed doing it today in chat. So we're kind of reaching the end of this segment. If you want to see more of these and get involved in more, come join us, for our fourth quarter. We want to work on building your independence, not just your financial independence, but your independence. You don't want to be depending on somebody forever in trading. You want to be able to find your stocks and build your trade plans and do all these things without anybody's help. But you got to start somewhere. And we're looking to finish this year strong. We're looking to go into this fourth quarter next week and really dig. What changed? I get this question a lot. What changed in me? What did I do that changed the direction of my trading career? And all I did was, I woke up one day and I decided to stop being a victim of the stock market. And I decided that I was going to take control of my career. I was going to wake up every day. I was going to grind. I was going to dedicate myself to learning, to understanding what it takes to build my financial independence through trading. And once I made that decision, everything came around. And that's what you have to do. You have to make that decision. So you guys, we've had a lot of people join us, and they're ready to make that dedication to themselves, to their family, to their life. It's going to take that. If you're going to be successful, it's going to take that. It doesn't take you spending thousands of dollars on education. That's not what gets you there. What's going to get you to the next level is what's inside of you right now. What we have to do is get it out of you, is to find it and bring it out. And that takes grinding. It takes hard work. It takes dedication. And it takes, making a decision that you're not going to continue to be a victim of the market, be a victim of everybody else. That you're going to take control of your life. You're going to take control of your future and get to the next level. So I'm inviting you to come join us for our fourth quarter. Just head on over to averagejoetrader.com. You can check out what we're doing. Or shoot me an email. I'll be glad to talk to you, or we chat over Skype, whatever. Just hit me up. Be glad to talk to you. So enjoy this segment, and have a great evening, a great night, and we'll see you tomorrow. All right, guys, welcome back to the next segment and how to really grow a small trading account. Today we're going to talk about managing risk, and as you know, that's going to be my focus. Fourth quarter is helping you grow your small account. Even if you have a big account, if you're not profitable, you got to start somewhere. You got to start small, and this works for you too. Whether you have $1,000 or whether you have $100,000 to trade with, it doesn't matter. Everybody has to learn the same skill. Everybody has to learn the same fundamentals. And a lot of that, one of the big parts of fundamentals is managing risk. And we're kind of moving up, to the next step here. Now what I've shared this with you before. Becoming a better trader by making smaller steps. You take these small steps in order to help you become better. The first thing that you want to do is avoid big losses. You want to make sure that when you lose, you're losing small. And that's where the risk management is going to come in. And then you're going to be in the game long enough so that you can start eliminating your mistakes. And you start breaking even overall. And then you're going to get even better and start booking small profits. And then we're going to get into consistent profits. There's no reason why you guys can't go through this in the fourth quarter. There's no reason why we can't go through this. If you're starting here in the fourth quarter, you should be able to get through it. If you apply yourself and you accept the challenge, we can get to this last step, and then we can start the next year on fire. We'll start next year consistent, and we just continue to build off of what we're doing. I also showed this with you too. This is the bottom-up pyramid of trading development. And you want to spend the most time on the basics and work your way up. So this is what we've covered in the last 9 to 10 presentations that I did. Discipline, emotions, impulsive decisions. We talked about all of that. We talked about our expectations, our objectives, and having the right attitude. Now we spent a lot of time in this. Now it's time to start looking at some trade specifics. We need to start optimizing our trade management, looking at how we place our orders, our sizing, our risk, and our money management. These are things that we're going to work on now. And this takes time. It takes time and patience. But if you do it the right way, you're going to have something that you can live off of and build on the rest of your life. And that's what it's all about. Okay, so risk management, usually it ranks very low on the priorities of new traders. They're really not thinking about risk. What lures us in, and what lured me in, was the amounts of money that you can make trading the market. I was blinded by the dollar, by that big dollar sign. And I think most of us are. So risk management really isn't one of the things we're thinking about. We're thinking about, trying to make as much money with as little money to start with as possible. There's nothing about managing risk at all. So, we way behind finding better indicators. The more accurate entry signals are worrying about stop hunting, unfair algo trading practices. None of that stuff matters if we have proper risk management. None of that matters. If our risk is managed properly and we build our trade plans using the proper risk management, then we're going to be profitable. But without the knowledge and understanding of risk management, you're not going to be profitable. You're going to be like that trader that may make $3,000-$4,000 today, may make $1,000-$1,500 tomorrow, but then lose $5,000, and then the next day lose $7,000, and then may make a couple $100, but then by the end of the week you're down $6-7 grand. Okay, and you repeat that. That's not going to get you to where you want to be. And you have a lot of people who are trying to get followers and trying to sell themselves, and all they're doing is posting their gains. They don't post their losses, and that's not realistic. And it gives us an unrealistic expectation, coming into this. So that's why I'm so adamant about making sure everybody knows what this is really about, and what it really takes to get, to that next level. So a trader really needs to understand how to manage his risk, sizing positions, create a positive outlook for their performance, set your orders right. If you want to be professional, and even if you're doing this part-time, you still have to be professional. You can't treat this as a hobby. There's no way treating this as a hobby is going to work. It's just not going to happen for you. So managing risk is a critical component of any trading strategy that you look to implement. Taking small calculated losers are just as important as nailing the big winners. Okay, you have to have effective risk management, and the only way you can get that is you have to be comfortable losing the money that you're willing to risk. That's the only way. If you never get comfortable losing the money that you're willing to risk, it's going to be very difficult for you to be a full-time trader, much less be consistent or make any amounts of money in the market. You have to be willing to risk that. Just like a restaurant owner has to be willing to throw away some food. He's going to overbuy. Okay? He's going to overbuy. And the reason is because he doesn't want to run out. What's worse? Running out of food and not being able to feed your patrons and they not come back, or making sure you have enough, have an acceptable risk or loss, and making sure that customer is happy, gets what they want, and come back. So we have to be okay with that. And yeah, if we're scared of losing the money that we have, then we're not going to make money. It's just not going to work. So we have to, if we start with $1,500, we have to say, okay, this is money that I don't mind losing as I'm trying to reach my goal. I can lose this and still be okay. I have a plan to continue to put money in. And that's what I did when I first started. I had a plan to add money to my account because I knew I was going to lose some. And I started not playing the lottery. That saved me $150 a week. Believe it or not, that was a big chunk of money. I started doing side jobs for people, whatever I could. And when I got that money, I would put it in my account. And back then, I don't think you can do it now with SureTrader, but back then, you weren't limited to what you could put in. I could put in $100, or I could deposit $150. Now I think the minimum is $500 on, using the debit card or whatever. But if I'm mistaken, let me know. But I think that's what I saw the last time I was trying to help somebody get funded. But now you just have to save up, and once you get whatever the minimum is, then you could send it in. I know it's a little bit difficult. It was easy for me then because I didn't have to worry about holding it and I end up spending it. For me, if I save $350, there may be something I see I want to buy. And I know I had this money sitting here. I might just spend it. So I know it's kind of difficult. So I would say as soon as you make it, if you're doing side work, if you're doing side jobs, just make sure you put the money in the bank as soon as you get it and don't spend it. So you can, feed your account as soon as you can. So newer and especially undercapitalized traders, are at risk of not understanding proper risk management and position sizing, because our account's small and we want to grow so fast. We want to get to enough money so we can trade freely without worrying about the PDT rule, without dealing with our money being overseas. These are things that we have to deal with, and it could cause us to trade on emotion, make bad decisions, and prevent us from sticking to our trading plans. And so this is very, very critical part of your growth and development, and trying to grow a smaller account. Risk management is critical. Okay, the first thing you want to do, though, again, and we talked about this before, is we have to have realistic expectations and goals. So when setting goals, we often set these big goals or make plans that can be somewhat unrealistic. When we start trading, we say, well, I want to make $500 a week. For a brand new trader just learning how to trade, that's unrealistic. To think that you're going to consistently make that a week. It's unrealistic. You have to start with small, attainable goals so that you're not overextending yourself and putting yourself in bad positions, because when you don't meet your goals and you start losing confidence and negativity comes in, and then you start going downhill, you start spiraling down, and eventually you'll get to where you can't even get out. You're done. So they may not be unrealistic as far as your ability, once you get to where you want to be. Okay? But you have to be realistic when it comes to where you are right now. So is it unrealistic to, at some point in your trading career, want to make $1,000 a week? No, it's not unrealistic. It can happen. It can happen easily. I made it to that point, and we're going to make it to that point going step by step. But you're going to see it's going to take time, and you're going to have to set realistic goals. And you don't want to have monetary goals that you try to meet every day. That will cause you to fail, especially in the beginning. Having monetary goals, the only goal you need to have every day is to be green. That's your goal. Whether you make $5 or $50, you just want to be green. If you're green every day, your account's going to grow. And you're going to continue to get better. And as you get better, you're going to make more money. You're going to develop your skill. And you're going to make more money as your skill develops. Any job, like in plumbing, any service job that you work with your hands in plumbing, being an auto technician, even doctors, when they get better, they're able to do more. And it all comes from them starting at a certain point and doing everything that they need to do to get better. And that's anybody in any job. And so we're no different here. So in order to avoid being disappointed by not doing what you said you were going to do, you have to learn how to set realistic expectations and understand what you're up against so that you can make the realistic goals. Because if you don't know what you're up against, if you don't understand what's going on in this industry, it's going to be very difficult to achieve your goals. So what you want to do is ask yourself these questions. And you may want to think about it this week. Are there certain emotions that keep you distracted from your trading goal or from executing your plan? Are there certain environments that's going to keep you from achieving the goal or sticking with your trading plan? And when I mean environments, I mean chat communities. Help. Our community could have so much noise that distracts you that you can't function. This is not the environment that you want to be in. You may need to be in a quiet environment where people just type. It just depends on what you need. And what you're going to need to get to that next level. So you have to be honest with yourself. And I said this before in the beginning. Yeah. And Dustin just muted me. You have to be honest with yourself so that you can begin to set plans and goals that you're going to be able to execute and follow through on day in and day out. Okay? And once you reach these goals, then you set bigger goals and then bigger goals. You don't set unattainable goals to start with. You can have, everybody wants to be a millionaire. Everybody wants to be financially secure. That's our ultimate goal. But we can't come in every day saying that I'm going to make $1 million. I'm going to make $1 million. What's that going to have you do? You're going to overtrade. You're going to try to make more than what the market is willing to give you. So yeah, we have these big goals, these big ultimate goals. But we have to have realistic daily, weekly, and monthly goals that we can honestly attain if we work hard. We just have to be honest with ourselves. That's the big key. You have to be honest with yourself. All right, so what are some realistic expectations for us? Okay, we have to expect to take acceptable losses. No trader or strategy is going to win 100% of the time. There's some clown on Facebook that says every day he wins every trade. Every day. Everything, he can't lose. And I'm like, yeah, okay, whatever. But I know if you're in the market long enough, a stock can set up perfect, set up exactly the way we want it, and then it failed. It doesn't follow through. That's going to happen. It's going to happen 20 to 30% of the time. And we have to accept those losses. So how do we keep these losses small? How do we get them to an acceptable point to where it doesn't really bother us every day? So we need to establish first a max loss per trade and a max loss per day. Those are the two things we need to do. Establish something that we're comfortable with. We do that with our position sizing. We also do it with stop losses. These are things that we have to establish for ourselves. You have to be able to look at yourself and be honest with your with your situation, with your circumstances, and move on from there. So let's talk about establishing a max loss that you're comfortable with. So for me, my max loss is going to be 5% of my beginning account balance. And really, it's not even 5% because I'm starting with $1,500. My max loss per trade is $50. That's the most I'm willing to lose on a trade. Okay, so I do that by position sizing. and understanding where I need to put my stop, where my profit targets are going to be, and whether this trade is going to make sense. And we're going to look at an example here in a minute as well. I'm going to bring up a chart here and we'll take a look at it. But the experience level that you have is going to have a lot to do with this. But you yourself have to look deep down inside and say, how much money am I comfortable losing? If you say 0, then you don't need to take any trades. Don't take any trades until you're able to accept a certain amount of money. If it's only $25, then that's what you accept. And you do that. Because you're going to have to start somewhere. And we're going to keep going up the steps. Also, you're going to put in stop losses. The stop loss is designed to limit your loss on a trade. So, let's say my max loss is $50 and I get in a trade for 100 shares. So, as soon as I get in, I'm going to add 50 cents to my entry price. If I'm short, I'm going to add 50 cents to my entry price and set my max loss stop. So this takes any anxiety that you should have off of losing any money. Because I'm in this trade, I'm willing to lose $50 to make 100, 150. Okay, I'm willing to do that. I'm putting it on the line for that. If I lose it, that's fine. We're going to move on to the next trade because I got another 100 I'm ready to lose. Okay, then you want to decide, well, how much do I want to lose a day? Is it going to be $100 a day? Is it going to be 150? Which will allow you to lose on 3 trades in a row if you haven't won anything. So, these are things that you have to sit down, be honest with yourself, and think about. And then exercise and use these stop losses. You can't get around that. So, and I firmly believe that when you're starting out in day trading, you have to use a stop loss. It's going to protect you. And let me tell you this. Our little bit of money that we have, our small stop order sitting out there, is not going to attract anybody to come up and take it out. If they come stop loss hunting, they're looking for big orders. That means these bigger traders have huge orders sitting out at different levels, and they're looking to take them out. Now, sometimes we get caught in that spiral, but they're not coming looking for us. We're so small and insignificant, it doesn't really matter. So we can't think that way. We can't not put in a stop thinking that it's coming against us. We have to not, if you're going to hold off putting your stop in, like I'll hold off until the candle closes because I don't want to accidentally get caught up in somebody else's mess. So I may hold off and wait, but while I'm there, I've got my finger on the button waiting to click it if I have to. But immediate is fine. But once the trade has been going on 10 or 15 minutes, mentally you get exhausted. And if you're relying on yourself to stop out, by then you may have convinced yourself to use another level and then use another level. And before you know it, you've already reached your max loss on one trade. So you have to have that max loss, how much you're willing to lose first. And then before you enter a trade, you have to know when you're going to get out of that trade. We know automatically if I'm going in 100 shares, my stop's at 50 cents over my entry if I'm going short, 50 cents under my entry if I'm going long. We know that. That's easy. And I try to use whole numbers so I don't have to think too hard. Having dyslexia is pretty difficult. So then, sometimes I use two stops. I have a max loss stop, then I have a technical stop. And I'll show you that here in a minute. And both levels need to be respected. The max loss stop is there to take your mind off of you blowing up your account by accident. You don't have to think about that anymore. You're protecting yourself. But you have to be disciplined about putting that stop loss in. What got me in trouble the week before last was I was not putting my stop loss in, or I was not sticking to my max loss per trade. I went rogue. And when I realized that and I knew what was going on, I stopped. You have to stop. And that discipline, nobody else was going to tell me to stop, because at this point you're your own boss. You're the only person that's going to sit here and tell you when you're going to have to stop. And if nobody does, or maybe, you have a wife like me that if you lose, you're going to get, slapped with the chancla a couple of times, and that'll make you, straighten up. But not everybody has that. So you have to make sure that you develop the discipline that you need in order to put these stops in. All right, so let me get these questions here. How do I adjust for max loss after a losing streak? If my max loss is at the bottom, like it's $50 a day, and I lose on 3 stocks, I shut it down for the day and I come back tomorrow. And if I have 2 or 3 days of losing streaks, then I'm going to have to go back and reassess my trade plan, my strategy. What am I doing wrong? And if I'm doing something wrong, or if I'm not doing anything wrong, and the strategy is just not working because the market is not there, then I need to look at the market overall, look at what it's doing, so that the next time it starts doing this, I can recognize it and stop trading. Because I know there's many instruments you can trade. You can do options, you can do futures. There are many things you can trade. You don't have to trade stocks. There's many strategies you can trade. But the worst thing you can do is just spread yourself so thin. So when the market is not where it needs to be, there's nothing wrong with sitting out and letting, waiting for the market to get back to you. Last week I sat out 2 days and still made $500 last week, average $100 a day. And I started with $1,300 on Monday. That's not bad. That's what, 46% growth? Where the hell are you going to do that? What bank are you going to put your money in to grow your account 46%? Nowhere in a week. And I took my time and I was meticulous. I didn't trade all day. I didn't trade every stock that moved or every stock that hit my scanner. I was real meticulous, and I went about it a certain way, and I managed my risk. And that's what we're going to be focusing on going into the fourth quarter. We're going to be talking about this every day. I'm going to try to make sure I share with you what I'm thinking when it comes to what I'm risking. I feel that is very, very, very important. All right, so one reason I like this type of strategy for new traders, and I'm not a new trader and I like doing it. I do it because it's comfortable to me. No, I don't consider commission costs when I'm determining my position size. I know if I trade 100 shares, my commission cost is going to be, right at $10 at the most. So, and if I scale out, it may be $15. So I already know that I could lose $15. So if I have my stop set at 50, at $50, then I know I'm going to lose $50 plus whatever the little bit of commissions are that I have. And believe me, that's not a whole lot of money for a lot of the brokers that are out there. Yeah, there are a lot of discount brokers out there, where you can pay fractions of pennies per share. But, for the most part, mainstream brokers, you're gonna pay about $10, per trade on average. So, but I don't think about commissions, because if my trade plan works, commissions get taken care of. If they don't work and I get stopped out, so be it. I'm ready to go to the next one. Let's see, you set your stop loss based off the ATR. Most of the time when the trades it goes against me, it ends up hitting my max loss. The only way is using technical levels. And we're going to talk about that when we get to the chart. Okay, what this does, it forces you to place a stop loss every time you enter a trade. And that builds discipline. It builds discipline, and you're learning to treat your losses just like games. You become emotionally detached from the trade. All you're doing is focusing on hitting the marks, hitting the levels that you have in your trade plan. By physically placing a stop, you're not going to run the risk of holding on to a losing position, waiting for it to come back and work. Yeah, it may come back and work, but when it sets up, get back in. Take your small loss and get back in. We're not at the point where, and I don't think I'll ever want to be at a point where I can sit here and hold a trade and be down thousands of dollars to wait for it to come back. And there are traders that do that. And I have enough money in my speed trader account to where I can let something go against me a couple $1,000s. And it's no big deal because it's within my risk tolerance. But when I'm in a smaller account, there's no way. When I'm in a day trade, there's no way I'm going to do that. A swing trade, yeah, I may be risking $1,000 or $2,000 to make $7,000 or $10,000. That's acceptable risk. But in a day trade, that's not going to happen. No way. So you're going to see me physically placing a stop, and I'm not going to run the risk of a trade running away from me. As a new trader, you haven't developed the skill yet to be able to read the price action and determine quickly whether it's ideal to stick with your initial stop or whether it's a fake. And we're going to look at that. We're going to be talking about that too during this quarter to try to help you learn how to read price action a little bit better. But it'll prevent you from holding your losing trades too long because of the fear of losing. So you have to establish an effective stop loss strategy. And you have to be clear on where your stops are going to be. And you have to learn how to use proper, stop loss techniques. There's no way you can go in without doing it. You have to learn that. So let's take a look at some charts here. Ooh, this thing logged me out. All right, does anybody have any questions while I'm waiting for this chart to come up? I think I answered everybody's question that it posted it already. But if you have any, go ahead and send it. But our chart will be up here in a minute. Ah, SCG is up. We'll take a look at this. All right, so let's see what strategies give you the lowest risk reward. Every strategy I trade. The way I trade it gives me the lowest risk reward. It's all in how you set up the trade. Even the reversals, the way I trade them, are gonna give me the same risk reward as a opening range breakout or a continuation, or a VWAP rejection. Whatever the case is, I'm gonna build and set up my trade the same. All right, so let's look at let's see, what should your max loss percent be when you have a small account? I use 5%. Actually, a little bit less than 5%. 5% of $1,500 is $75, but I use 50. And what you want to do is, you're not going to be making a whole lot of money, and it all comes with planning your trade. That's what we're going to talk about, right now, making sure that when you have a trade plan, that it's going to give you the right amount of gains for the risk that you're incurring. If you don't have the chance for the right amount of gains, you shouldn't be taking a trade at all. And it doesn't matter if you're trading a $20 stock or $80 stock. It doesn't matter. The $80 stock, you're not going to be able to buy as many shares, but typically that $80 stock is going to have a bigger window of opportunity. It may move 2 or 3 points. Whereas the $20 stock may only be able to move 60, 70 cents. So you have to look at it from all angles. So let's look at SCG. Let's say we're going to take this 5-minute opening range low. All right, so here's the 5-minute opening range low right here. Let's say 55. This is where we're going to take it. Just below 55. So let's say we're going to put our order here at 55. Going to have an order sitting out here to get short at 55. Now, we know this is a $55 stock. Let's say we want to risk $50. That's our max loss on this. Okay, 50 bucks. What are we basing this trade off of? We're basing it off of the opening range low, which is 55.03. We're getting in at 55. Now, if I want my max loss to be $50, I need to see, okay, well, how much room do I need to give it over 55? Well, the VWAP is right here. So if we close above the VWAP, or we move too far above the VWAP and this level here, then the trade plan is probably going to be dead. and we can't afford to give it but so much room. So you got a choice to make. You can go in 100 shares, give it a 50-cent stop loss, which will be, your stop would be all the way up here at 55.50, right there. Now I'll make this green so you can differentiate between the two. All right, so your stop is up here at 55.50, your max loss stop. If your technical stop is going to be your opening range low, and you can use the VWAP since it's right here. They're both right here together. So the more resistance you can have that you can use for your technical level, the better you're going to be. So what you're going to do is you're going to get in at 50. As soon as you get in, you're going to put your hard stop at 55.50. You know your technical level is at 55.03 or whatever. So if this candle sells off a little bit and then comes back and closes back above this level, your technical stop has been hit and you need to take the trade off. You need to stop out. You're going to have, this is giving you the ability to manage your trade. You have a protective device in here, your stop loss, but you still want to be in control of your trade. And you take it off when you lose your technical level. Now this thing can pop up, reject, and it can set up again, and you can get in and take another trade. Use the same risk reward. Okay, you use that same risk reward formula. And so how do you know? The question now becomes, well, how do you know how much room you need to give the stop? You know, why can't I go in 200 shares and give it 25 cents and put my stop, right here and put it at 25.25? You can do that. You can go in with 200 shares. Okay? You have shortened the amount of room you're giving the stop, but you're increasing your potential profit. Now, the way you figure this out, and the way I figure it out, is I look at the last 5 candles, and I kind of quickly in my mind average what the range is on these candles. Now, it's not, it may not work perfectly on an opening range trade because in a stock like this stock did not trade pre-market. This is something that I saw the night before, and I'm having to base it on this. So theoretically, we've got 8 cents, 11, 10 cents, 6 cents. Let's go to this one, 22 cents. So 25 cents, going in with 200 shares, 25 cents might be a good deal. It gives you enough room that if this candle swung 25 cents the wrong way, it won't stop you out. So that's how you have to figure out how much room you're going to give your trade. It's all based on what's the average movement of a candle in a stock. Now that doesn't mean that if it has an average of 60 cents, it moves $1.20, because we can't predict the volume, how much volume is going to come in. And we all know volume drives stocks. So we can have a massive volume spike come in and drive a candle twice its average range. But you would want it to go the opposite direction, twice the opposite range. You don't want it to go against you. But it can happen. You got that 30% chance that it can go against you. That's why you have your max loss stop to stop you out in case it pops and runs. You haven't lost all your capital, so you're able to catch this trade again if it sets up. You know, you got the opportunity to catch it. Okay, so now we know where our stop's going to be. Let's say we're going in 100 shares. This is what I did when I traded this stock. I didn't trade the open with, day trading. I got in a swing trade. That's a totally different mindset. But let's say I was getting in this for a day trade, 100 shares. If I was sitting here at my desk, that's what I would have done. 100 shares. Max loss, 55.50. This gives this stock the ability to pop all the way up here and then pull back without stopping me out. And a lot of times you see a stock with a big wick run all the way up to the 20 and pull back. Because what it did, it noticed a huge order sitting there on the 20. And it probably went up there, took it out, and then we started coming down. So now I know I have a 50-cent stop. I need to have at least, at a minimum, a 50-cent first target at a bare minimum. So the first target is going to be the first level of support here, 54.41. So this is a 59-cent move. So I'll take profit here at 59 cents. Yeah, it's just 1-to-1, but this isn't my final target. If my final target was here, there's no way you should take this trade because the risk reward is not going to be right. You want it to be at least 2-to-1 once you complete the whole trade. You want it to be at least 2-to-1. And your first target needs to be at least 1-to-1. So if you're risking 50 cents, your first target needs to be at least 50 cents away from your entry. If you can't get that, then you don't take it. Now, what if we went in 200 shares? We risked 25 cents to make 54 cents. Is that a better risk reward? Yeah, it is. So in some cases, getting in with bigger size is going to make your risk reward a lot better. It doesn't give you, but you have to make sure that you're giving the stock enough room to work. If you strangle the stock trying to get a better risk reward ratio, if you strangle the stock, then you'll get stopped out more often. This is why when you see me do my weekly recaps, when I'm starting small, my wins and losses are real close together. No, they're not quite 2-to-1. Because when I'm trading smaller, my first target may be 1-to-1. But then if it fails and it bounces, I might get stopped out at break even. So I only was able to take 60 cents on 50 shares. I find my final target based on the support. Let me move this over. So here in this case, my final target might have been 54. Or I would take off some here, some at 54, and just leave the rest on to see if we get 52.63. I'm using these daily levels as profit targets. I'm also using moving averages of the VWAP if they're below this. If they're not below it, then I'm using levels of support or resistance. If I have a big window like this, that's 54.11 to 52.63, I may pick a psychological level in between, like 53.50. I may pick it to take profit. But then it'll be a psychological level. Because more than likely this thing isn't going to wash out $1.50. It's probably going to come down and try to bounce. And you want to make sure you take profit as it's coming down. Yeah. But that's the issue, guys. You can't think about money at this point. You're trying to develop skill. You're not trying to get you're not trying to make all this money at this point. You're trying to learn how to trade. Because if you don't learn how to scale out with small size, when you go to big size, you're not going to be comfortable doing it. And you're going to mess it up. And you're going to end up starting all over again. So you want to make sure, and you see me scale out with 100 shares. All right, I'm going to show you. It's the end of the day, so I'm going to log into my account. All right, so I can show you exactly what I made. See if I can pop this out. Pop out. All right. This is what I made today. Off 100 shares scaling out. I traded twice. 100 shares scaling out. And this is full commissions, guys. This is not the special rate that they give me right now. That comes off at night. So you can add $8 to this. So I would have made $148. So all I get is $1 off each, $1 discount per per trade. That's what my commissions are $3.95 versus $4.95. That's it. But when it factors it here, it's going to be factored at $4.95, and it adds all of these fees in. So this is my net P&L. So you can trade with 100 shares and scale out and make money. I made, let's see, Monday I made $57. Yesterday I made right at 200. Today I made 140. I'm trading small size. I'm scaling out. And I may make, $500-$600 again. I may even make $1,000 this week. Who knows? But I'm trading smaller size, 100 shares, 200 shares, and I'm scaling out. And I'm trading at SureTrader. So you can do it. You have to develop that skill. You got to develop that skill. And if you don't do it small, you're not going to be able to do it big. If you can't make $50 a day, there's no way you're going to get to making $200 a day. Now, you may nail a big trade here and there, but when you add all your days up, you're going to be negative. So you want to be consistent. And learning small and making sure that you're developing and that you're growing and you're taking the right steps, going in the right direction, you can't beat that. You can't beat it at all. And this is what I do every day. When I take a trade, before I take a trade, I'm looking at what's my potential profit? Where my target's going to be? I look at the levels here. And if I see a huge window, I'm going to look at a psychological level in the middle that I can take profit on. Okay, and how do I determine whether these levels are legit? I'm watching time and sales, which you know we don't have any now. I'm watching time and sales, and I'm watching level 2. And I'm looking at, when we get to a level, how many orders go through, how many people I see on the bid and the ask. And most of the time, you're going to have more orders go through than you see here, because a lot of them are hidden orders. Could be dark pool orders, who knows. So you got to watch time and sales in this. When I start to see a bunch of green orders come through and this stuff isn't moving, I'm probably going to take profit at some, pretty quickly, because I'm thinking that this is probably going to bounce. And I may take it before it gets to this level. But I'll sit there and I'll watch it, and I'll watch the fight. And whoever I feel is winning or losing, that's going to determine what I do. So that's what you saw me doing today. That's exactly what you saw me doing today. And let me get that chart for you real quick. Close. Let me see. Do I have a desktop that I can use? Yeah. All right, let me pop this chart out real quick. And this is why a lot of people say, you can't, what stock was that? Give me 1 second. SCG. Gotta type in the right stock, dude. Pop this chart out real quick and bring it over here. All right, so here's a chart from the trade I took today. Okay, when I got in, this is how I was basing my risk. Okay, there was a level. Let me bring that chart back up. Hold on 1 second. I'm going to draw the levels here so you can see. 52.63. Horizontal line. 52.63. That's close enough. All right, this was the first level. This is where I got in. This was my first target. I got in with 100 shares, took half off here. Okay, next, the next target was 52.23. This was too close. This was too close for me to take profit again. So I picked a psychological level at 52. I think I put it at 52.05. So I used the whole dollar mark, 52. Just put it 5 cents above it. It actually hit it and then covered some at under 52. I think at 52.99. That's what this double tick is for. This was only one order. It just filled what it could at 05, and then the rest got filled at 99. And that, to me, that's a perfect trade. I watched the price action. If you're listening to me when I was talking, that's what I was saying. I'm watching this, I'm waiting. It put in a candle, put in this doji here. And this is an indecision candle. And we were trying, and when this candle opened and it went up, and it started to sell, when I saw that weakness, I got in. I got in 100 shares. My stop was 50 cents, which the VWAP was well within that range. So even if it turned around and went back and tested the VWAP, I could still be in that trade. Yeah, good point. Let me put the 9 in here. I don't have the 9 moving average on over here for some reason. All right, so here's the 9 here. Now, once this trade started to work, automatically the 9 became my trailing stop. You know, that's how I manage my risk. The second entry right here, on this one, yep, I saw big time resistance right here. I saw big time resistance at 52.50. That's why I got in when I did. It's all based on price action, what I was seeing. And very critical, I had enough room to get in and still allow the stock to test this 9 if it wanted to. I went 100 shares again, gave it 50 cent stop, more than enough to allow this to test. And if it did, it wouldn't stop me out. You know, same thing right here. We rejected here. I got in because we were showing weakness. I had 50 cent stop. This allowed this stock to dip, come back, and retest the 9 and this level. And I was able to take profit at my first target. Now, yeah, I had to take it off, you know, once we claimed the 9 here. This was my profit stop. But you can see how I manage the risk. I'm trading small. I'm not trading scared. I'm trading small. But I'm managing my risk. I'm being smart about my profit targets. I'm being smart about what I'm risking. And that's what we have to do. That's what everybody needs to learn. And that's what happens when you spend thousands and thousands of dollars on education, and none of it sits down and it talks you through risk management. They tell you about it, but you got to see it every day. You have to see it modeled every day. You have to see risk management practiced every day. And that's what I try to do. And when I mess up and when I'm wrong, I try to tell you and let you know, hey, I messed up. And, you know, this isn't right. So this is what we have to focus on. This is the big focus going into the fourth quarter. If we can get our risk management down, we can have a bad market and make good money. All right, Simon, I'm glad you like it. I'm glad I'm not putting you guys to sleep. But you know, so if you have questions when we're in chat, you know, I'm there. Send me a question. You know, if the stock is volatile, I may not answer you until after it calms down, because I'll be paying attention to the stock. But the thing is, this is something that everybody has to get in place. I don't care how much money you have. If you don't manage your risk, you're going to lose it all. And you don't want to lose all your money before you really get a handle on this. And it's going to take time. Well, I'm glad you're going to keep me around for another quarter. You know, I don't want President Trump calling me talking about I'm fired. Yep, that's what happens. People blow up their accounts before they really get to learn what they need to learn. Because they want to get in trades so quick. They want to copy people. They want to mirror trades. You know, it's like, I want to, as soon as you get in, tell me so I can get in. Doesn't work that way. You know, you have to know what you're doing. Even if you're going to copy what I do, you still need to have your risk tolerance in place. Your risk management in place. You got to know exactly what you're going to do. Not, your plan isn't to follow me. It's to understand what I'm doing, what I'm looking at, what I'm saying, and make these decisions on your own and be comfortable with them. Because the goal is not to create a bunch of dependent people. It's to create a bunch of independent people. So that eventually you don't need me to help you. And you know, some of you guys are in chat. I mean, you guys are doing good. You may trade a little bit too much, but you know, you may overtrade. You may be trading when you don't need to, but you know, overall, you're understanding how to manage your risk, and that's great. That's great to see. Awesome, group. Drew, glad to hear that.